If you've just tuned in for the first time, welcome. If you've just tuned in for the second time, welcome back. Two setups that I really want to bring to your attention for real juicy reversal setups, potentially. And the first one's on the New Zealand dollar. So all I'm doing is I'm going out to the daily time frame. You can see we're in a bearish trend at the moment, but we're falling off of a cliff. We know that doesn't go on forever. RSI's gone oversold. We've got divergence on MACD as well. And what I'm looking at specifically is the previous low. Okay, so if you look at this previous low zone right here, if I just go and zoom into that, you'll see that back in COVID, March 2020, when most of these markets took a little bit of a dip, we saw some dollar strength and most of these pairs dipped down. We can see that we actually held out here. Price action was telling us that the bears were trying to push down and got rejected. We closed out around 56.50s. Again, we couldn't break that level. Again, we couldn't break that level. And we were trying to push down. We couldn't break and close below that level. From then on, for the next 2 years or so, 2.5 years, we ended up going into a bull market and we were stayed above that level, above that threshold. But right now, we are testing that level again. Now, it's not likely, and I say not likely, based on the probabilities that I have, based on my own testing and based on historical data of this market, it's not likely to just blast straight through that level, right? It may do if we see a bigger crash in the market, which we're likely to see, but right now there's a momentary pause where we're testing that support level. And remember, as traders, we're trying to catch the in out of the and make the money on the in out. It's not like I'm trying to hold this thing forever. I want to make money on the opportunities quickly. So we hit this level and we see some support, right? Immediately we see some support. RSI goes oversold, etc., etc. Now when we go down to the 4 hour, you can see that in that zone we're starting to form what is known as a inverse head and shoulders. Okay. An inverse head and shoulders setup is the reverse of a head and shoulders, funnily enough, but what it is a reversal pattern, and it's formed of a shoulder, first shoulder, then a head, which is here. Let's draw this on. And this is a very typical head formation. It's normally 3 or 4 candles that forms the head. The most common conventional ones are the 4 candles with the kind of tweezer top set up at the top. But this is a very nice time symmetry and price symmetry head pattern. And then we have a neckline, okay? And then we have a second shoulder. Now, the highest probability head and shoulders, because you've got 3 types. You've got a downward slanting neckline, a horizontal neckline, and an upward slanting neckline. And what we're looking for actually as a high probability setup for a reversal to the upside is an upward sloping neckline. Because what usually happens is we see a head and then we see a higher low for the second shoulder, and then we blast straight through, and then we're looking, and then depending on your entry strategy, you either enter a retest of the neckline or you just enter on a break of the neckline. So you literally enter on the break of this neckline. If you're really, really aggressive, you'll trade the shoulder, but that's I definitely don't trade the shoulder because I don't know if this is good. I know the probability of what's likely to happen next if we form the head and shoulders, but if we don't quite complete the head and shoulder formation, I don't know what the probability is. So I don't trade the aggressive second shoulder, right? But it's definitely something to pay attention to. This would be a great reversal pattern going into next week. So keep your eyes on this one. The other one is the pound dollar. Now on the pound dollar, I'm going to go out to the monthly chart because this is even more powerful, right? On the monthly, what's going to be a big determining factor on this is how we close this month. Now, the reason I want to show you this is because the month ends in 2 days. We've only got 2 days, so it's not like you've got to wait about for this thing. This will be something that you'll catch next week, early next week. And this here, as you can see, if we look left, this was COVID, fell off a cliff, gap, boom, hit this like a solid concrete floor, 0.0781. Bears tried to push down, couldn't quite do it. Bears tried to push down, couldn't quite do it. Bulls took control. 2 years later, we've never, ever tested that level again. We stayed way above it. Look at this. Does that look attractive for a reversal? Maybe. And the reason I say maybe is because it all depends on how this candle closes. This spike below is annoying, right? No doubt about it, because you've got to get protective stops in. If you're going to buy this up and capture a move, a little rally, you've got to get stops in. And the size of this is slightly annoying, because even if you risk 1% of your account and you set up your stop loss limit at 1% risk, this is the type of trade where you could be in it for a long time. You could have a massive move, like a 500 pip move, and only get 1% on your account. It could be a very low profit trade for the size. Does that make sense? So, that may or may not be something you can get involved with. Entries, if you do drop down to the lower time frame on the daily, you can see we've held that zone on the daily as well. We've got a low test candle. This could be your entry. You could place a buy stop order above 109.49 or 109.50. Again, a nice level. Wait for that to be penetrated. Wait for you to get into that trade that way. Or you could be looking at something more intraday. The problem with the intraday, the 4 hour and below, is we have actually closed below that previous low. So that's although it's a fake breakout, it's closed below. So technically there's a lower probability there. So you want to be careful of that. We could just spike down. If you're entering down here, chances are you get spiked out and then the market rallies in your favor. So it's definitely going to be a higher time frame setup. Daily, daily, not 4 hour. So it's going to depend on whether or not you've got basically a strategy in your playbook that allows you to get in like that. So I'll be interested to hear your thoughts. Let me know in the comments if you're looking at these, how you're looking to trade them. But I'm certainly not looking to sell these at the moment because of where we are at market. There's actually a really nice opportunity to make some money on a quick relief rally. We're likely to see some buy orders come in at this area on both of these pairs. So that's it. Let me know what you guys are trading, and I'll see you next time.